You know, one of the most costly errors in trading has to do with Fomo. Traders are afraid that they're going to miss the move, so they get in late and they miss most of the move, and usually the market goes against them and they lose money. I want to show you a way how we could avoid that error and at the same time have better risk to reward ratio in our trades. Hey everyone, welcome back to the channel. I'm DD. And I want to show you a way to avoid that bad mistake of FOMO. Don't be chasing the trade after you missed it. And the way we're going to do that is by using limit orders. And we're going to wait for the price action to break out, come back to the price that we want, and we're not going to have to follow the trade. And it's true, sometimes we'll miss those moves, and that's fine. But if you at least know that there's a method where you could see the breakout and wait for it to come back and retest a bit and get a good price using a limit order, not only will you have a better entry, more of a sniper entry, but you'll also 9 times out of 10 have a better risk to reward ratio. So let's just get right into the charts and I'll show you what I'm talking about. I'm going to give you 3 examples today. So let me just show you quickly how to execute a limit order. If you don't even know what a limit order is, I could explain it to you. When I was a scalper at first, I definitely didn't know what a limit order was. Most scalpers and day traders, they use market orders, which is you automatically hit a button and it executes your trade right away. Another way to make a trade is by putting in a price and waiting for the trade to come back. That's called a limit order. And the way to do that on MT4 and MT5 is, when you make a trade, you hit that plus button. And over here on top, you'll see it says market execution. So you want to click on that. And over here, you see you have buy limit or a sell limit. So that's what you want to do. So if you're hitting a sell, you put the sell limit and then you actually put in a price. So let's say 0.91425 is the price. And you could put in your stop loss and take profit. And then you hit place order. And it's just as simple as that. So instead of doing the market execution, you're just doing either the sell limit or you're doing the buy limit. And that's what it's all about. And then it just automatically fills your order when it hits that price instead of chasing the trade. So here's the first example. I actually took this trade in the dollar Swiss franc today and made about 3,100 bucks. So as you see over here, I made a channel and the market was just ranging in this channel. And then it broke out and came back to retest. Now, when it finally did break back down after the retest, it was a very long candle. And I typically wait for the end of the candle to get into the trade. The problem was I was only going to this bottom over here. I wasn't sure that it was going to go lower, but I did feel that it would go to at least the bottom over here. So if I would have waited till the end of that candle to print, this is an hour candle, then I would have to get in somewhere around here, which would be a 14.7 pip stop. And if I was going to go to where I went, around here or something, it would be maybe a little bit more than a 1.24 risk to reward ratio, which is not great. I like to go for a lot more than that. So what I did was I set a limit order, a limit sell, and with the limit sell, I'm waiting for the price to come back, hit that price, and continue to go down. And so many times after a big candle like this, you'll see that the market comes back a little bit, maybe halfway or so, and kind of tests or knocks out some stops before it continues going down. And that's what it did over here. So I put that limit sell, halfway through, and I was able to get a 2.03 risk to reward ratio over here. So now let me show you another example. Here we are in GU, the British pound versus the US dollar. And these are 4-hour resistance lines. So the market went up and wasn't able to break through, eventually made sort of a double top, and came back down very strong. Then in the pullback, it broke back down after the pullback and had a second pullback. And in this second pullback, I saw another kind of small double top. But the problem was that when it actually broke through, it really just broke through strong. And by the end of this candle, there wasn't that much room till the next support line. And I would have so much to cover this trade over here with the stop loss. So if you would see it over here, it'd be something like, I would only go for about 17 pips and I need to, really protect this trade with about 36 pips, which is a terrible risk to reward ratio, and I would never do that. So what I did again was I kind of waited for the retest and, just put my limit sell over here, and it actually was able to get a 2.33 risk to reward ratio. So I'm just waiting for it to come and test this break, which is exactly what it did. And then it went up a little bit more into my stop range, but that's fine. Once it retested and it went down, as I thought and so many other traders thought, it was a great trade. And finally, our last example, this is in GJ, the pound yen. And a similar idea, like I was making this trend line and I saw that there was tops. Maybe this is even sort of like a head and shoulders, the left shoulder, the head, and maybe the right shoulder over here. And then it came down very strongly. But since it went so strong and we were approaching this kind of mini support, and then I also wanted to catch it before this major support, so I didn't have a lot of room because of that big candle. But I'm not going to have FOMO and follow a trade just because I think it's going down. If I miss it, I miss it. But the opportunity comes when it retests. So instead of, having to protect it on top of this and go for a 1.5 risk to reward ratio at best, I waited for it to come back, and I actually got in over here once it came back over here, and I still had a 39.9 pip stop loss. So, and I was going for about 80 pips, and eventually it totally did go through. So that was another perfect example of this break and retest using the limit order and having a great risk to reward ratio. So if you guys like this strategy of the break and retest and using the limit order and getting the best risk to reward ratio, then please show your support by giving a like and subscribing to the channel. And all my subscribers are eligible for a free trading course. It's helpwithtrading.com. And there we go through everything you need to know, from setting up your charting platform, choosing a broker, great strategies, understanding how to have the trader's mindset, managing risk to reward ratios, and understanding risk management. It's a full-fledged course and it's free to my subscribers. I really suggest you check it out. And if you guys want to, send me your trades, I'll definitely analyze it and reply. I would love to get that discussion going. You could totally tweet it to me. Just upload the image with imgbb.com or any other platform like that. And I'd love to just, have some discussion over there. And if enough people send it to me, then I would totally do a video of, my analysis of these trades, and it would be really cool. So I hope you guys like this tip. It's a really good tip because you want to avoid FOMO. You want to avoid, chasing the trade, and just wait for the trade to come back to you. It doesn't always work. Sometimes it just takes off, and that's fine. Bye-bye trade. We'll wait for the next one. But you never know. Sometimes it will come back and it gives you the best bang for your buck because it's the best risk to reward ratio. So I hope you guys like it, and we'll see you guys next time. DD out.